TheoTrade. This is Don Kaufman. October 13th, 2021. There are 15 minutes left inside of just a chopped out trading session. In the pre-market, well, we had some CPI come out. Again, some chopped out trade. We had Fed minutes come out, more chopped out trade. The S&Ps right now are up a very unstable 7 handles. Nasdaq right now, you can't exactly call this ripping after some of the sell side activity we've seen in here recently. But the Nasdaq is back to the 14,739 level right now. Again, also very largely destabilized in what seems to be some fairly inside trade today. Nevertheless, volatility, that's still pretty much the name of the game. Now, on this evening's video, we're going to talk a little bit about some of the retail stocks and will retail stocks really suffer this holiday season. But before I get there, just in general terms, what can we expect for the remainder of this week? The one aspect that I love to talk about here kind of midweek, of course, is the expected move. So if you take a look at the expected move on the week, and again, to kind of gauge this, it gives you a feel of, well, some of the price action this week. Again, it's chopped out and volatile. It's, the only aspect that really, I think, describes this marketplace, a little bit of chaos in terms of trade. Nevertheless, we're looking for this $80 move. Now, that's an $80 move higher or lower on the week. And we almost clipped down to it earlier this trading session. Nevertheless, of course, the S&Ps are leaning ever so slightly lower on the week. But with that being said, we still have an extraordinarily high probability of tagging either the upper end or lower edge of the expected move. I'll tell you, we've tried to stage rallies a multitude of times inside of trade today, only to pretty much fall back into this chopped out range. And again, what is a little bit disconcerting at this point is the bonds, they got a huge bid back under them. And I'll tell you the disconcerting aspect of this. The bonds the last 2 days ripped to the upside. Now, the bonds ripping to the upside, that should take interest rates lower. Of course, it will. They're inversely, proportional to that. But you would expect a bit more sell-side activity in the financials. That didn't necessarily occur. There's one other aspect that, again, really kind of resonated with me with the bonds and the rally in the bonds. I would have anticipated a big pop to the upside in the monsters of tech, and we're just not getting it. That's why I'm saying it's a little bit of chaos in trade. Be extremely careful right now, specific to the Nasdaq. The Nasdaq, if the bonds continue, to the upside, you would really anticipate the Nasdaq to actually rip once again to the upside. Now, of course, there's earnings coming up, but really of the Nasdaq stocks, that's next week. The earnings that are in scope the remainder of this week are predominantly going to be some of the banks. We heard from the likes of JP Morgan today, and again, that just created a little bit more volatility. Nevertheless, keep eyes on the bonds. Keep eyes on the bonds, because if the bonds continue to perpetuate any more of an up move, you would anticipate this big kind of, bid to come rushing in expressly to the monsters of tech. Now, the monsters of tech, of course, are going to be your Microsoft. Some negative news on Apple last night, but a big bid coming back in here under Amazon. Although Amazon right now, this doesn't have a lot of influence in the overall marketplace. Amazon's only up 3% year-to-date basis, but the bid should come rushing into Facebook, Google, Tesla, maybe even a little bit of NVIDIA on that particular front. Be careful of it. Again, if the bonds are going to continue to rally, look for the bid to come under the Nasdaq. All right. Let's talk a little bit about retail stocks. And one of the reasons I wanted to talk about some of the retail stocks is I see opportunity. And it's opportunity in a marketplace that's fairly efficient. As I said, we're watching financials and, we're watching obviously the monsters of tech. I think some of the retailers though have kind of fallen off the radar screen to a larger degree. Take a look at, and we'll start with like Walmart. All right, so now we're actually looking expressly at a consumer staple. Now, I don't want to get too specific over here, but of course, we're going to have a holiday season. It's right around the corner. You haven't looked at the calendar lately. It's mid-October, all right? So we're staring down the face of a major holiday season, but all we keep hearing about right now, supply chain breaks all over the place, inflationary pressures, and it just goes on and on. We still have to listen to the Fed once again. There's going to be another Fed announcement before the end of the year, and in conjunction with that, of course, the debt limit crisis, which is very likely to be a crisis once again. So one of the things that I've been looking at a lot lately is like, okay, it looks like Walmart already getting a little bit of the smackdown here in regards to the possibility that the holiday season may not exactly be spectacular on a year-to-date basis. Yeah, that's right, people. Walmart is not faring well this year, actually down on the year. So then I took a look over at something like Target. And Target is still up some 32% on a year-to-date basis. However, it is still well off some of the recent highs. So Target's already actually, priced down a little bit, okay, in conjunction with Walmart. Then I had a quick glance though over at something like Costco. Now this is actually one of the first underlyings that I find interesting and a possible opportunity. If there are going to be breaks in the supply chain, if inflation pressures are going to come in here, things are going to cost a fortune. How well is Costco going to do? And moreover, can Costco even get the items that it's going to need to have a spectacular holiday season? I mean, you think to yourself, you're like, it's Costco. Of course they can do that. Well, Apple can't. Apple just came out with a warning that they're not going to be able to produce as many phones, which literally implies aspects like Costco taking a little bit of a hit. But hey, listen, we're all members. So I looked at Costco, and Costco could be the possibility of an in-out put spread. So the next time that Costco bids back up, I may look to take a bearish in-out put spread, because Costco is still, in terms of retail, it's just a hop, skip, and a jump off of, well, it's all-time high. And I know that there's been a lot of positive news expressly into Costco, but it's not necessarily rocking the stock, if you will, to the upside. So Costco is one of the underlyings where I think there could be a little bit of a bearish opportunity in the very near term. All right, then I started thinking a little bit about, maybe some of the home improvement stores. So I took a look, both Home Depot and Lowe's. And what started me in this is when I looked at the XHB. So if you take a quick glance at the XHB, which is actually the home builders, but the home builders, it's not just the home builders. Actually, the home builders, ETF, one of the primary products in here are actually things that go in the home, and of course Lowe's. This has already seen some pretty significant sell side activity. I took a look at it, and I'm all right. It was up almost 40% year-to-date basis. Now it's only up 28%. It's already taken a hit. So I cruised over to Lowe's. Okay, where is Lowe's? This is where things get interesting. Okay, completely and totally unimpeded, unencumbered, unscathed, if you will, is Lowe's. The other one over here is Home Depot. And I got to tell you, when I looked at both Lowe's and Home Depot, I'm a trader, I would actually rather take the position in Home Depot. So Home Depot is sitting at or basically near its effective all-time high. Again, completely, totally unscathed on a year-to-date basis, with, again, some sell-side activity already hitting things like Walmart. And you look at this and you think, it's going to trade in autonomy. Okay, nothing is going to trade in autonomy if the marketplace is to get hit. Nothing is going to trade in autonomy if there's a supply chain break that's going to influence, the outcome of, Home Depot even being able to obtain items. Nevertheless, the position that I am likely to take in Home Depot, I recognize that there's earnings. For those of you that are looking for a little short-term burst to the downside, I think you'd have to use the November 12th expiration. You'd have to come in here with something like along the lines of like an in-out spread. It's about one strike in the money, one strike out of the money. Okay, so here's a $5 wide spread for about a $2.20 debit. That would be your short-term play. And you would be prior to the earnings announcement. The earnings announcement's out here, okay, in terms of mid-November. I would actually shallow my trade to the November 12th expiration expressly to miss the earnings announcement. So that's one idea. But Home Depot would have to make some degree of a move to the downside. Now note, the spread that I brought up a moment ago, okay, it's really fairly short term. It's a month. But you only really need this underlying to go down just a few bucks to see degrees of profitability in here. We're not like a major bearish trade. It's not a major bearish trade. But that's exactly what I've actually created. The other trade I've done, which is a little bit more up the learning curve, I used a deep in the money put as a synthetic short stock position. Again, I purchased a deep in the money put as a synthetic short stock position. Why did I do it? It's not cheap to be able to do this, but literally I'm buying a put that's almost the same as shorting the stock, right? And I'm about 100 days out, which actually makes a bit of a statement. What's my statement? Now, obviously, I'm actually going to want to hold this position for a considerable period of time. That's number one. Number two, I want to be short for a considerable period of time. Listen, there's a bottom line over here. You're seeing volatility start to emerge. It doesn't matter that there's a bid back under the marketplace. I told you, it's likely you get a bid under the marketplace, especially with the bonds rocking back to the upside. Nevertheless, okay, if you're a little bit longer term bearish on the marketplace, you see volatility starting to emerge, okay, you got to go after what is unscathed. What's unscathed right now is a handful of retailers: Home Depot, Lowe's, Costco. Take a look at those products. 5 minutes to go to the cash close. SPOOs are up about 15 handles. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.